What are the different kinds of risk involved in mutual funds? And how can this risk be resolved? Financial expert Mr. Gururaj will guide us through. Gururaj, the screen is yours.
Sometimes you may also ask, sir, market went up, why my NAVs have not gone up? You may ask that question also, right? So not necessarily I'll be investing exactly in those 30 stocks or 50 stocks. I may have a completely different portfolio. That portfolio may not have done well. Say, for example, in the last 3-4 days, if you see, many of the large cap funds have done well. Mid cap and small cap has not done well. You cannot come and say, sir, markets have gone up, my NAV has not gone up. It will not go that way. It will depend on where your portfolio is invested, which kind of stocks, whether those stocks have gone up or not, whether that sectors have gone up or not. So many factors. That's where I can't have a direct relationship saying that markets have gone up, my investments value should also go up. So that is regarding the equity market. So equity market is driven by the company news, right? If some company news is bad, then obviously that stock will get hit. And as we have seen, the poll results or tomorrow the GDP numbers doesn't come good, or the global there is an issue. All these factors will affect the equity market. That is why when we say market risk, these are the factors which affects the market. But when it comes to bond, you may think that boss, it is like FD only. Why there should be risk? Right? You may ask that question. You are also investing in safe investments. So where is the risk in bonds? I can understand in equity it is risky. Why even the debt funds are risky? You may ask this question, right? What happens is in debt funds there are two type of risk. What we call it as interest rate risk and credit risk. So interest rate risk is nothing but if you expect the rates to go up, the bond price will come down. So my NAV will be negative for a particular period. Similarly, if there is any default in the companies where I have invested, when I say default, they have not repaid the capital or they have not paid the interest due on a particular date, then that bond price will fall and accordingly again I will get a negative return. So bond funds will also have a few days of negative return. That's where we say there is volatility in debt funds also. And if it is international fund or gold fund, it is all traded in dollars. So obviously, I'll have currency risk in these two categories. So that is why we say mutual funds investments definitely are risky.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.